Are you looking to invest your money at a place where you don't have to worry about whether you will get your money back or not, and at the same time you want to earn a pretty decent interest rate which is higher than the inflation that is prevailing? Then you must consider the RBI floating rate savings bond as one of the best products that you must add to your portfolio. Well, let's learn about this product to understand how it can be a good fit to your portfolio. Hi, my name is Harshvardhan Dawar and I'm the founder director of Wealth Cafe, where we help you make smart money decisions. RBI's floating rate savings bond is one of the best products available in the market today for a retail investor. If you invest your money in where you need not worry about one, a possibility of default because they are backed by sovereign guarantee, and second, where the interest rates are headed because these are floating rate bonds. Well, let me help you understand more about these bonds. The floating rate savings bonds were launched by the government in the year 2020 and they've become pretty popular now as a mode of investing or parking part of your money, which is a part of the debt portion of your portfolio. These bonds are issued by RBI directly and you can purchase them through one of the point of sales, which can be the nearest bank, maybe your State Bank of India branch or your HDFC branch, where you submit your application and you can purchase these bonds through these point of sales. These bonds come with a tenure of 7 years. That is, if you put your money today, you will get the maturity proceeds of the bonds after 7 years. In addition to that, the interest rate on these bonds is paid to you every half year. That is on June 30th and on December 31st each year. So these bonds will give you interest payout twice in a year. In addition to that, what you need to understand is that these are floating rate bonds. Floating rate meaning the interest that is paid to you is not fixed today, rather it is fixed every half year after the previous payout has happened. So if a payout has happened on June 30th, an announcement is made on July 1st with respect to what is the interest you can expect to earn for the next 6 months. And similarly, after the interest payout on December 31st, you receive the fresh or new interest rate from Jan 1st to June 30th. So the biggest advantage of a floating rate bond is whatever the prevailing interest rate, when the interest rates go up, you would earn a higher rate, and if interest rates come down, you will land up earning a lower rate. But at any point of time, you don't have to worry about how you need to manage your portfolio. Given that these bonds are floating rate bonds, you as a retail investor need not worry about where interest rates are headed, and once you park your money in these bonds would reset the rate every 6 months and give you a rate based on how interest rates are moving. So if you look at what has happened in the last 6 months to a year, interest rates have started to go up. If you had invested your money in a product where you are earning maybe 5% and it is locked in for the next 3 or 5 years, then you have no option but to leave the investment there and earn the lower rate. But when you put your money in a floating rate bond, every 6 months the interest rate is reset and you are able to earn the return which is higher at the end of every 6 months if the interest rates go up. The recent announcement which was made with respect to the earnings of the bonds from January 1st to June 30th, in the previous half year, the bonds gave a return of 7.15%, which is the returns of an NSE bond plus 0.35%, versus now, since the interest rates have gone up, you can expect to earn a return of 7.35% for this half year versus 7.15% for the previous half year. So what happens here is you've invested your money for 7 years, but the interest rate is going to be reset every half year based on what is the prevailing rate. So as rates are going up, you're able to enjoy a higher rate. Now obviously this comes to the downside that say 6 months, a year or 2 years down the line, if interest rates cuts start to happen, you should expect to earn a lower rate whenever these cuts happen. But for now, it's a good product to have. Why? Because it is backed by RBI, sovereign guarantee. There is no risk of default. And second, as interest rates are going up, you continue to earn a higher return on these bonds. One downside of these bonds is that they do not have liquidity. So compared to your other investments, say a deposit in the bank, if you want to break the deposit, you can go and break it at any point in time. You get the money back into your savings account. But with respect to an RBI's floating rate savings bond, these bonds do not have the kind of liquidity which a deposit enjoys, and you will expect to receive the money only on maturity, with the exception of premature withdrawal allowed for senior citizens based on their age. So if liquidity is not a concern for you, then you must definitely look at parking some of your funds, which is a part of your debt portfolio, in RBI's floating rate savings bond. Now you may ask that why is it that you have not heard about it from the various agents in the market who sell you a lot of financial products. The reason being that it is a 7-year product, and the kind of commissions that are paid out for selling or distributing this product are very small. So it makes it very unattractive for a financial product seller or a financial product distributor to offer this product to you as an investment option. That is why you would not have heard of this. But if you were to contact an advisor, say a registered investment advisor who's a SEBI RIA, who's mandated to work for your benefit, you will find that you will be able to look at products like this which are best in your interest rather than the interest of the seller of the product. If you have any questions with respect to the floating rate bonds, or if you would like to contact an advisor, do reach out to us at iplan@wealthcafe.in, and we'll be happy to help you out here at Wealth Cafe.